Hey, welcome back. It's Jason Walter here. Foreclosures banned until 2022 and 40-year mortgages. These are some of the proposals that were released yesterday from the Consumer Financial Protection Bureau. This proposal, which would need a final approval, generally prohibits mortgage servicers from initiating foreclosure proceedings until after December 31st, 2021. However, a key point here is that this is not just for federally backed mortgages because it would apply to all mortgages, both federal and private. However, it only applies to loans for principal residences, so not investment properties. So in today's video, I'm going to give you a breakdown with all the details regarding this brand new proposal. And before that, please hit the like button. I greatly appreciate that because videos like these tend to take hours to make with all the research involved. So all I ask is for a simple like. And also consider subscribing if you haven't done so already. I post videos about how this pandemic is affecting our housing market. The Consumer Financial Protection Bureau is concerned about the fact that the protections under the CARES Act are set to expire this fall. This is because the earliest that a homeowner could have entered into a forbearance plan was March 2020, thanks to the CARES Act. Therefore, the end of an 18-month forbearance plan would occur in September and October this year at the earliest. And currently, there's approximately 2.5 million mortgage loans in forbearance. The Bureau is concerned that these forbearances are going to cause a foreclosure issue in the United States. Under current foreclosure rules, a borrower must be at least 120 days late on their mortgage before the foreclosure process starts. As of the end of February, there were approximately 2.1 million loans that were 90 days or more late, but not yet in foreclosure. Keep in mind, though, that the vast majority of these 2.1 million loans were in forbearance. In any case, on the Bureau's website, it states the following. Industry data suggests that nearly 1.7 million borrowers will exit forbearance programs in September and the following months, with many of them a year or more behind on their mortgage payments. What the Bureau is concerned about is that when these homeowners end their forbearance plans, they may be transferred immediately into the foreclosure process rather than being offered repayment steps such as a payment plan, a payment deferral, or a loan modification. And a quick reminder here, a loan forbearance is not a loan forgiveness program. All those missed mortgage payments have to be paid back eventually. However, if you have a federally backed mortgage, a lump sum payment is not required, but more on that later. To mitigate the potential issue that homeowners will be transferred immediately into the foreclosure process after the forbearance ends, they are proposing 3 key changes, and these are huge. Number 1, give borrowers more time by providing a special pre-foreclosure review period that would prohibit servicers from starting a foreclosure until after December 31st, 2021. However, this would only apply to loans that are backed by principal residences and not investment properties. Number 2, give loan servicers more options by offering a streamlined loan modification process to get homeowners into a more affordable mortgage payment faster. This could potentially increase the term of the homeowner's mortgage up to 40 years. Yes, you heard me correctly, a 40-year mortgage. In addition, the loan modification will not increase the principal and interest payments that the homeowner pays. Rather, it just increases the term of the loan. If the loan modification allows a deferral of amounts owed until a certain period of time, such as when the loan is refinanced or the home is sold, the amounts owed will not accrue interest. In addition, no fees would be added by the loan servicer, and late fees would be waived upon acceptance of the loan modification. However, here's my biggest takeaway here, and this is absolutely huge. It states here, the loan modification must be made available to borrowers experiencing a COVID-19 related hardship. In other words, if the homeowner is experiencing a financial hardship due to this pandemic, then their loan servicer must offer a loan modification as one of the payment options, regardless if they have a federally backed mortgage or not. This is absolutely huge news because the CARES Act, remember, it only protects those who have a federally backed mortgage. So people who have a FHA, USDA, a VA loan, or a loan backed by Fannie Mae or Freddie Mac. For example, under the protection of the CARES Act, a one-time lump sum payment is not required in order to pay back all your missed mortgage payments once the forbearance is over. However, and this is a key point here because there's no such protections in place for homeowners who do not have a federally backed mortgage. So in other words, loan servicers for non-federally backed mortgages could require the homeowners to make a one-time lump sum payment once their forbearance period is over. If this proposal by the Bureau actually gets approved, then all of this gets blown out of the water because this would mean that no homeowner, regardless if they have a federally backed mortgage or not, would need to make a balloon payment once their forbearance plan is over. All right, let's think about this for a second because this has huge implications here. So let's just say your mortgage payment is $1,000 per month. Let's say you enter into a mortgage loan forbearance program for 18 months. That means that you would owe your lender $18,000 after your forbearance plan is over. So how many people would have the financial means to write a check for $18,000 after your forbearance plan is over? I'm guessing very few. To summarize this would mean that no homeowner, regardless of what type of loan they have, would have to make a one-time lump sum payment. All right, the third section of this proposal would require loan servicers to communicate with borrowers about their options. All right, let me read the exact text of this proposal. So borrowers not yet in a forbearance plan at the time of live contact with the loan servicer, if forbearance options are available to the borrower through the servicer would be required to ask the borrower if they are experiencing a COVID-related hardship. If the borrower indicates they are, the servicer would be required to list and describe forbearance programs made available to that borrower. This is very important because this is a step above what the CARES Act requires because thanks to the CARES Act, it's up to the homeowner to request a mortgage loan forbearance. The loan servicer is not required to mention it. In contrast, for borrowers in a forbearance plan at the time of live contact, the servicer would be required to identify the date the borrower's forbearance program ends and list and describe loss mitigation options made available to the borrower to resolve any delinquency the borrower will have at the end of the forbearance program, such as a repayment plan, a loan deferral, or a loan modification, for example. The servicer would also be required to provide the actions the borrower must take to be evaluated for such loss mitigation options. It's important to note that these two provisions would only be temporary because they would only apply until August 31st, 2022. All right, so will these proposals actually get approved? And if so, when? The answer is don't expect any answers regarding this because the Bureau is requesting comments to be submitted by May 11th, 2021 by loan servicers in order to help determine if any revisions should be made or if this should get approved. As I mentioned in my video the other day, it's my personal opinion that these forbearances are not going to be causing a foreclosure tsunami. And if this proposal actually gets approved, this will mitigate the chances of a foreclosure crisis even more. However, what do you think? Please comment below. If you enjoyed watching this video, please hit the like button. I greatly appreciate that. And also consider subscribing. You also can follow me on Instagram. I'm Sacramento Realtor. Hope you have an awesome day and look forward to seeing you on the next video.